College times are fun, but not for Shaumodatta.
I had to drop my MTech because my father retired from his job at that time and he was the only earning member at that point of time. And then I took a job because 20,000 salary a month seemed more important than the degree at that point of time.
Tough times create strong individuals. He took this challenge and worked tirelessly. And in a span of 10 years, he, along with his wife, built a portfolio of over 4 crores.
So as a couple, we are currently earning nearly 1 CR per annum, and we also have a beautiful daughter, and she goes to play school.
So how did he build such an impressive portfolio despite all these challenges? Let's find out. Hi Shaumo, hi Debopriya. Welcome to Power Pioneers. Shaumo, let's start with your early childhood, your career journey.
I was born and brought up in Kolkata. That's where my journey started, my schooling, my college, everything happened in Kolkata. My father got retired from his job around 2012. Our total earning was kind of halved, you can say, right? So I always had this keep in back of my head that I had to earn something for the family. And that's where when I passed out in 2013, I got an offer to pursue my MTech. I also got a scholarship, but I couldn't continue because of that pressure in my hand. And then I joined an off-campus to Cognizant.
Looking back today, so many years later, more than 10 years later, what do you think about that decision?
I decided one thing when I took those decisions, and then later point, right, I'll not regret whatever decision I take. So I don't regret it now because looking at today and on retrospection, right, I took a right decision on the monetary front because I've done good. I don't know what parallel path it would have taken me into, but whichever path that I am right now, I'll support that.
Wow, that's so nice. That's so inspiring to hear. Thanks for sharing that, Shomo. So currently, what's your portfolio like and how is it split across different asset classes?
60% of my portfolio is in equity and equity equivalent.
Okay, so equity as in direct stocks or mutual fund?
Yeah, both together. So when I say equity and equity equivalent, I'll consider direct stocks, my US stocks, as well as mutual funds.
Okay.
25% of it is in debt and equivalent, and then 15% is real estate.
Okay, understood. And this is joint portfolio.
Joint
right?
portfolio,
Right.
exactly.
Okay. Like what is the sort of corpus right now?
So it's north of 4 crore right now. So it varies, like fluctuates 4.5 within that.
Understood. Wanted to ask you, Debopriya, like you have been investing in mutual funds since your first job. What sort of triggered you to start investing, and is there certain specific framework you follow for selecting mutual funds?
So I think I started with a SIP of 3,000 rupees in 2 funds. So it was 6,000. They both were mid caps, and then over the years, after 3-4 years, like he was saying that the XIRR was really good. It came around 15 to 20%, and then we kind of revisited that whatever we have been had, that time. We wanted to change. Then we kind of got us a mixed basket of all types, like large, mid cap, small, and also there are hybrid funds also. And that is we googled up, learned online and found some very good, promising stocks where we can invest in, and that is how we decided our funds that we currently do.
Got it.
We're currently doing a 1.5 lakh of SIP every month. That's how we are planning.
Got it. And just curious, usually when you go to banks, they give you the regular mutual funds. Were you also stuck in them?
Yes.
And how long did it take you to realize that actually you should switch to direct?
I think after 5 years, he started reading more about it, learning more about it, he changed all of them to direct stock.
I think you see that across a span of 10-20 years, that even that 1% delta does a lot of change to the wealth. So, Shaumo, let's talk about, you spoke about 60% in equity and equity mutual funds, rest of 15% in real estate, which I'm assuming is the house that you have right now, and 20% is in?
25% is debt and equivalent.
So let's talk about equity because that's the major part of the portfolio, and let's talk about mutual funds since we are, discussing that. What is your mutual fund selection strategy here?
So I tend to keep it very simple with mutual funds because I also directly invest in stocks. I tend to capture the market growth in different perspective and also wanted to stay diversified. So I choose a large cap, which is nothing but the top 50 companies of our India, right? So I tend to capture four main buckets: one of the large, mid, small, and non hybrid. Sometimes I also keep it in one of the like small cap and mix of small and mid, but that's just the over diversification, I can say. I'll do some recalibration after 2 3 years. So that's how I divide the mutual fund to keep it straightforward, less hassle, and then as an SIP format.
Understood. So on the mutual fund part, you said you have large, mid, small, and a hybrid. Hybrid is the mix of equity and debt, right? So within that, do you have only one scheme, which is like the index, or do you have multiple schemes? Because there's HDFC, SBI, everyone offering mutual funds.
We only keep one. Yeah. So we'll give it some time for 2 3 years. If it doesn't perform or it doesn't perform in the sense to our expectation or maybe below the benchmark, then we tend to revisit it because otherwise we don't want to disturb the compounding part. And that's how we tend to choose the bigger asset management company so that it's kind of a safer bet compared to the others. But if we get 1% less also, that is fine with me
Got
because
it.
I have other things to compensate that.
Got it, got it. So then you mentioned for selecting it's bigger AMC, so I'm assuming AUM, bigger AUM and lower expense ratio. These are the two things that you look at. Understood. In your 60% of equity, how much is in direct stocks and how much is in mutual funds?
On direct stocks, I would say it's mostly close to that 80% is in direct.
Oh, okay.
Yeah, because slowly, actually, it was not 80%, it was mostly 50-50. But my direct stocks have given more returns. So it has been skewed now. I'll have to rebalance it, but I'll do it after some time.
Got it. Understood. And coming to your debt portfolio, 20-25%, where is the debt part invested in? There are debt mutual funds, FDs are also form of debt.
It's mostly constructed of the PF, which gets contributed from our salary, right? Then the PPF part, we have both have a PPF account. We also have a Sukanya Samriddhi for our daughter, and then rest is in FD and
Fair. And the last part, which is real estate, right? You purchased a home and you're mentioning about EMIs. Usually it's a very debated topic, right? Buy or rent. What was your take when you thought of sort of buying a house?
So yeah, back in that time, right, it was very straightforward to me because we were paying the rent equivalent to the EMI that would have been for the property, right? So for me, it was no brainer. Like take the property because if I pay the same rent and I'm planning to stay here for 10 years, so it's better off taking the home loan, paying off the home loan, and end of the day, the house will be yours. Once we take the loan, we'll take the loan now. We'll pay it off quickly. We don't want to pay the EMI for a longer term, and then we'll see. And it actually paid off for us. Yeah.
Got it. Let's move to the investment part. We were speaking about your portfolio, and a big chunk is in equities. So we were talking about US and Indian stocks, right? So what's your framework in selecting stocks, and is it different for Indian market versus US markets?
Yeah, it's little different. Like we are staying in India, right? And we have diverse sectors over here as well. But for US, my only focus is tech stocks, right? Tech companies, so to say. I work in the tech background, and that is the reason my investment is in US. And there's one more reason why I invest in US because it also gives me a dollar hedge around with the currency, right? Because every year that passes on, right, we are losing our monetary value in INR dollar term, right? Although it is like irrespective of the returns that I make over there. From Indian perspective, I tend to read multiple articles and the macroeconomic stories which are going around. Which sector is getting the tailwind? Based upon that narratives, I build my thesis. I tend to buy some, reports. I pay for the reports. There are multiple RAs available in the market, right? Alignment with my strategy along with the sectors that they are talking about and based upon that, I take the bets on the organization or the stocks that I'm picking.
Got it. So very fundamentally, you approach the company.
When I approach the organization or the entry points, right, it's very much fundamental. But when I decide upon a exit, right, it comprises two things. There's a technical part also comes into play, but I'm not an expert, but I understand a few things like the, say for example, the moving averages, right? So there are some other matrices which gives you some idea, right? It is overvalued, right? Say for example the P ratio, right? It gives you an understanding about the sector or the organization which you are tracking, whether it's overvalued or undervalued.
Got it. Understood. So, are there certain metrics? There are tons of metrics and even stocks, right? Are there certain metrics that you follow to sort of shortlist your stocks?
Two three things that I generally follow. The fundamental way, the growth of the company should be consistent for the last 3 4 years, right? There's an also an application, right? Screen ad. Yeah. So you can always give your matrices and screen out different companies. So I tend to play around the small sectors, right? In a mid and small cap space. That's where I'm more interested about, because my mutual fund takes care of the other, like large cap and the other sectors as well, and then also tend to look around the the profitability of the company, look around the balance sheet, whether the money that they are earning, whether it's translating into the cash flows or not, and then I take my bet on one or two of them.
Great, perfect. And you were mentioning about kids, and you have a beautiful daughter. So how has that sort of incorporated into your financial planning? How has this evolved? With the onset of being parents.
Since staying in this place and we wanted to grow our portfolio, that was one thought that we had in my mind. But after she came into our life, right, we also have one other thought right now that along with building our portfolio, we wanted to have a secure future for her as well. So we are investing for her, so that once she grows up, she's 18, she has wants to go for higher studies, right? We have planned some part of it for her higher studies, and then whatever is required, right? So in today's value, how it is, what's the amount, and what it will be after 18 years or 20 years, right? So that's the calculation that we did, and then we are putting per corpus separate for her. So that's.
So is it like particular, it's goal-based investing, right? For mutual funds, you have one fund that is for her education. Is that how you plan that?
Yes. So one mutual fund for her, so that it's generally a small cap, mix of small and mid cap, right? Because she has time till 18 20 years, and it works really well when you give the time for the small and mid cap.
Right. So what's your fire number that you've calculated?
So we are actually on the coast fire number right now. If I stop working today, I can still go off with my expenses with my corpus right now. But I don't see it that way. I'm enjoying what I'm doing right now. I'll still continue, and probably if everything works well, so we'll continue for 10 more years. So our goal is to have 10 crore in 10 years, next 10 years. And that would be sufficient according to the calculation, right, for taking care of the expenses and the.
Got it. No, fair. And I think that's the perfect place to be in, right? You are not working for the money, but actually because you really like doing it. So I think that's the perfect place to be in. So great. And, Debopriya, I would love to ask you, right? We spoke about, deciding, picking the right investment choices. Again, as both of you are working, and wanted to understand as a couple, right? How do you sort of divide the financial responsibilities and financial decisions? How does that work?
So anything which is one time and a ransom amount, he usually takes the call. So it's like buying a car, or making a down payment for a house. So whatever is one time and ransom, he does it. And wherever you need to be persistent, consistent, like the EMIs or household expenses, the child care expenses, or her education maybe, I plan to take them up, because it's like it helps me to plan for my expenses when I, at the beginning of the month when the money is here, I plan it out and I go by that only. Okay. So it works for me. It's more systematic that way. So that's how I want to do that. And he makes investments, his risk appetite is higher than mine. So I leave him, enough space, and he does it. But we are in a good space. I would say that we manage and divide responsibilities.
Wow, that's great. So, you have been through a money journey yourself, right? Seeing up close from dropping off at a point to manage family expenses to now being in this comfortable position. Now your daughter is growing up, right? So, what are the money values that you would want to instill in her as she grows up?
The one thing that we have been following, stay below your means. That helps you in your lowest point as well as highest point. Love to instill that be humble and gentle in your approach to anybody, and stay your life very humble. Money will obviously come once you do the right things.
Perfect. I think perfect note to end this podcast. Join hands together is always more powerful. And thank you so much for sharing your story with us, Shaumu, Debopriya, and Vedanshi. It's been lovely talking to you. Thank you so much.
Thank
Same
you for
here.
having
Thank you
us.
so much.
We hope you liked the video. If you want to join our podcast and share your story, fill the form in the pinned comment.